Well, hi everybody, and welcome to the Buffett and Beyond Research Saturday ETF report. And as we mentioned on Friday in our daily letter, we're going over the utility ETF, the XLU, and we're going to look at some stocks in there. And I just want to show you a few things which are really, really unique. Now, this is August 2nd, 2025, for the beginning of August. And if you want to live on the beach like Jimmy Buffett once did, you've got to invest better than Warren Buffett does now. And here we are on the beach, and this is the beach that you want to walk on. Now, just about a mile north of here on this very beach, which is to your left as you're looking at this picture, just about a mile down the road or up the beach toward the north is where I first met Jimmy Buffett, right on the beach there, folks. And many, many miles south of here, I want to tell you a little story, but we'll get there in just a second. So first, let us look at the XLU, because everybody's been talking about the XLU, at least this past week, because it's been doing so very, very well. So let's take a look. Now, this is the XLU, and this is big charts. So we came here, and we're looking at the XLU over 5 years, and this is the XLU down here. I just want to show you something. This does not include dividends. So if you have the XLU and you're getting about a 3% dividend, you have to take this almost 45% return, add about, say, 15% to it, bring you up to about 60% here, and this is where you would be returning over the past 5 years if you had the XLU and got about 3% dividend. Now, you're saying, well, the black line, which is the S&P 500, of course, is where I want to be. I want to be, in fact, in the 30 stock growth portfolio, because that doubles the S&P 500. In fact, on a compounded basis, 2.5 times to 1. So the growth portfolio is all the way up here. But look at two things here. Look at this decline that we had in the beginning of this year when we heard about tariffs for the first time. The XLU hardly budged at all. There it was right in here, and the market came down, what, 20% or so? And that was the S&P. The NASDAQ came down even further. That was scary. Let's go back to 2022. Remember, this is a 5-year chart. When the market came down 19%, 19.6%, again, the black line is the S&P 500, and the NASDAQ down 34%. But what did the XLU do, which is the yellow line in here? Absolutely nothing. It went up, it went down, it went up, it down, and ended the year 2022 right where it began the year 2022. So that's very, very interesting. So if you're interested in something like that, and if the XLU is paying you a 3.5% dividend. And what we used to do one time, a long time ago, is that some people came to me, they were friends of mine, and they said, Joe, why don't you run a portfolio for us that buys utility stocks and sell covered calls on it? Because I had given a lecture one time on that. And we actually did. We put our money together, and we were buying the individual stocks, the utility stocks that paid nice dividends, and by selling covered calls, and boy, this took a lot of work, because we needed several $1 million in it, and we had to buy at least 300 shares of each stock. So I would sell a call 1 month out, I'd sell another call 2 months out, and on and on and on like that. So it was a lot of work, but it was just maybe an hour a day in the morning, and just looked at that. And so therefore, we really got returns like this, where we had a nice safe portfolio at times like 2022 and the beginning of this year. We had a nice safe portfolio, and we were returning, at that time, the dividends were about 7%, and we were doubling that, selling covered calls on that. So we were getting about 14% during that time, and we had a nice steady portfolio. So anyway, that's something to think about, but that's not the subject of what we want to talk about today. But back then, yes, short-term gains, but back then you got fantastic write-offs if you were in certain types of real estate. So what we did as a group was combine buying real estate and using the deductions that we were able to get from the real estate. And this is when Ronald Reagan came in to the presidency, and so we have fantastic deductions on that, and those deductions offset the income that we were getting from the utility portfolio that I had devised at that time, and that worked very, very well for a long time. And then the utility stocks or companies just started getting stupid, and there was one out in Arizona, and they bought a paint company. And I've used this example before, but they bought a paint company, and of course, what do utility engineers know about paint? Absolutely nothing. And so the companies were getting kind of stupid at that time, and we just said, hey, and the tax breaks were leaving the industry, and we got the tax breaks, we got the income, so we just went our separate ways. But that's what you can do with these kinds of things, and those are the strategies that I was paid to come up with a long time ago. So we have 5 years here. Getting back to our subject, let's go over here to 1 year and see what all the hullabaloo is all about. So using big charts again. Now we have the black line, the S&P 500, but this yellow line is the XLU for this year. Now what's happening? Well, as we described yesterday in our daily letter, is that the utility companies are getting into more and more power generation because AI is taking so much power, and they're talking about some of the power units that have to be built will supply a small city. That's how much power AI is needed that they're building right now. And so a new act has been signed in by the president, and they're going to build little nuclear reactors, and power companies, and GE Vernova is involved in all of that. So we have something here. So we have maybe a 3% dividend on top of this. So we're outperforming the S&P 500 and not taking, here's this decline in the beginning of the year, the big decline in the S&P 500, and very little decline, maybe half the decline at the lowest point in the utility index, but it came bouncing right back. So we have something here that maybe there's something in the utilities. And what do we do about it? Well, why don't we go to the computer program? I just happen to have it on here. We'll go to the computer program and we'll see what we could do. Okay, so I go to the website, I'm going to hit into the subscribers locker, come down here to the ETF and individual stock database, click on that, and then it says click here to access the ETF. You click there, and then come down to the bottom, the very bottom, where it says click here to access the ETF, because you click on anything else and it doesn't work, and we've tried to fix that, or the computer folks did, and they couldn't or haven't up to now. So you got to click on that, and we go to the ETFs all the way over here now. We click on the ETFs, and we just happen to have the XLU utilities listed there, and we'll click on that. Now let's go to the projected 2026 ROE, and we'll click on it a couple of times. Well, we're going from the lowest to the highest ROE. Let's go from the highest to the lowest. And here are some companies that Vistra Corporation, which none of us have heard of, Constellation, which some of us have heard of, and then NextEra Energy, which is the old FP&L, and that we've all heard of that. And so let's look at some of these companies and see what they have been doing. So what I did was take the symbols of the top probably 7 or 8 stocks here, and I plotted the stocks against the S&P 500. So I just went to the computer program, picked the top 7 stocks, and I plotted them for 5 years against the S&P 500. Now the black line is the S&P 500 down here, but look at these 2 stocks up here. And what are they? VST, that Vistra that we heard about, and the other one was Constellation Energy, CEG. So we could look at those stocks there because they are way outperforming everything else. Now, what happens if we take away these 2 stocks and then we get a better look of what's going on down here? So remember, up here we have Constellation Energy and Vistra, And we'll take a look at those in a second. But right now, let's get rid of those so we could see this chart a little bit better. And there we are. Now the same stocks without Vistra and Constellation. S&P 500 is this black line, and we can see that all these other stocks are underperforming by a long way. So we're saying, all right, we don't even want to look at them. Let's look at those other two stocks and see what we can find. And there's the black line, the S&P 500. This is over 5 years again. So we're just looking at Vistra and CEG. And we're saying, wow, if these are utility stocks, what are they doing? And we're going to take a look at them. One's returning 1,000%, while the S&P is up maybe 90% over 5 years. And Constellation Energy is up 700% in here, and Vistra is up 1,000%. So what are these stocks doing? And folks, this is how we find stocks. We just play around with the computer program, and then I come up with something like this. Never did I think that I would see two utility stocks. And by the way, they're not called utility stocks anymore. They are called power stocks. So if you want to be in the know, if you want to get the terminology right, that's what we have. So now we're back to the program again, and we're looking at these two top stocks, Vistra, and let's just click on it. And there we go. We're looking at this stock here, and boy, oh boy, we look at that clean surplus ROE, and we are looking at something that is really phenomenal here. Again, it's not paying all the way over here to the right. It's not paying much of a dividend because it is a power stock now. So it is expanding through acquisition. Very, very nice. Look at this return on energy. And we looked at the chart. We see that, this is up 1,000% over the past 5 years. So they are in the business of buying up power companies and building power companies because they are in the power industry, and they are looking very, very nice, and they know expansion is needed, and the market is rewarding them because they're bringing in some serious dollars here. So, I mean, look over here. This is net income over here, and we're seeing that in 2021 and 22 they lost money, but then they started making money, and serious money. A little raggedy in here because 2024 they were at $7 right in here. Then they went down 2025 this year to $6.70, but next year they're looking at $8.15. That's pretty amazing. And let's go to Constellation Energy. And for some reason it split or it did something, and I'm not sure, but I'll know next time. And we're looking at some pretty good returns in here, and CEG is doing very, very well. This is almost a growth stock. Again, no dividend or 0.5% dividend, years to pay debt, very, very low debt. So Constellation is doing some pretty good stuff in there. And that's how we pick stocks, folks. So now we're going to look a little further at CEG and VST, and we're going to look at some of the numbers, the net income growth, the revenue growth, and I'll dig deeper into these two companies to see if maybe one or both of them could be in our growth portfolio, because the power generation area seems to be the hot topic, and something just passed by the president, which we talked about in Friday's letter, is assuring that these companies can grow and supply the power and expand the power grid that is needed to carry electricity from one place to the other. So everybody's forgetting about that because they're talking about, okay, let's plug in all our electric cars, which I think are mandated in California over the next 10 years. They're all going to be electric out there. And, the rest of the country is going to follow, at least partially. The thing is that how do you get the electricity from where it's being generated? Because California is one of those states where they don't want to build any power plants. And that's why they got in trouble way, way back, because all of a sudden the cost of power went way up and they had to import their power, and the states around them said, okay, California, we're going to get you, charge ridiculous amounts. So these companies have to be built, and the companies have to realize that these power plants have to be built, but it's also the transmission lines. And we were talking about this the other day, and somebody was asking how come there's not more electric cars in the area, and my answer was, well, how are you going to get the electricity? And down here it's Florida Power and Light. How are you going to get the electricity from where they produce it to our neighborhood? And the thing is, it has to come over the lines. But what if everybody, our town is a real big town. It's got 2,700 people in it, and everybody plugged their cars in at night. The power lines would not be able to carry all that power to charge the cars every night. So the whole infrastructure has to be rebuilt. So we're looking at two stocks here, CEG and VST, with this high clean surplus ROE. Wow. So we're going to take a closer look, and we'll look at those stocks, and you'll hear more about it this coming week or the week after, folks, because I'm looking at a couple other stocks I want to change out, which maybe have seen their better growth days and are starting to slow down a little bit, such as that trucking company we took out, SAIA, and there's some other maybe food companies, restaurants that have seen their better growth days, and all of a sudden now everybody's shifting to power, and the growth is in the power area and not in the fast food business. I mean, fast food's still going to grow, but who's going to grow the fastest? So, folks, we had another great week this week. Markets going up. Amazon, Microsoft, all the big companies have reported. Just NVIDIA hasn't reported yet. I think it's got a couple of weeks to go. But things are looking good. The economy's going good. The GDP came in at 3% this week. So go out, enjoy the beach, go for a walk, be with your family. Most of all, stay safe, and we'll see you back here in a couple of days.